Does an allegation that coronavirus is present inside of restaurants satisfy the insurance provision protecting against direct physical loss or damage? To find out, you have to read Consolidated Restaurant Operations versus Westport Insurance, but it's 19 pages. Don't have time for that? I've got you covered. This is TLDR, Too Long Didn't Read, where I cover New York Court of Appeals cases, and I try to do it in 5 minutes or less. This is the episode on the case of Consolidated Restaurant Operations versus Westport Insurance Company. The citation for this case is 2024 New York Slip Opinion 00795, published by the New York Court of Appeals on February 15th of 2024. The issue in this case is whether an allegation that the COVID virus, the COVID-19 pandemic, was present in insured restaurants and resulted in an end to in-person dining and business transactions constitutes direct physical loss or damage under insurance policy provisions. To understand and appreciate the context of this case, there's two things that's helpful to understand. In New York, in insurance law, contracts are read in this particular way. Unambiguous provisions must be given their plain and ordinary meaning, and the interpretation of the provision is a question of law for the court. But ambiguous provisions must be construed in favor of the insured and as against the insurer, against the insurance company. The other thing that's helpful to understand is that a motion to dismiss under New York CPLR 32111A is a motion to dismiss a case before a trial, where it can be done right after receiving the complaint, a motion to dismiss based upon documentary evidence. And essentially, to prevail on that motion, the moving party has to establish that documentary evidence conclusively refutes the plaintiff's allegations. So what do we have in this case? The facts are that the Consolidated Restaurant Operations Company, it's a corporation, CRO, we're going to call it CRO, owns and operates dozens of restaurants in New York. CRO got an all-risk, that's what it's called, an all-risk commercial property insurance policy from Westport Insurance Company to cover their restaurants. And the policy insured against, and this is important language, all risks of direct physical loss or damage to insured property. All risks of direct physical loss or damage to insured property. And it also insured against business interruption losses directly resulting from direct physical loss or damage to insured property. That's the key phrase. Then the coronavirus pandemic struck the world, including New York, and it resulted in many businesses suffering, including, in particular, many restaurants, which either had to close or had to restrict their ability to serve in person. And people didn't want to go out and frequent these restaurants in public because of the coronavirus pandemic. So CRO submits an insurance claim to Westport Insurance based upon that policy, alleging that it was forced to suspend or curtail its operations due to the presence of coronavirus at its restaurants and based upon the governmental restrictions. CRO sought money for loss of revenue based upon the presence of coronavirus in the restaurants. Westport denied the coverage, disclaimed, said, we are not covering this. And then CRO filed a lawsuit for breach of contract, which is saying you're failing to live up to your end of the agreement, the insurance agreement, and brought this case in Supreme Court. Supreme Court then had the case, and Westport moved to dismiss. They moved to dismiss the cause of the complaint based upon failure to state a cause of action under CPLR 32111A, saying that CRO could not possibly establish that the coronavirus caused direct physical loss or damage, not even alleging that it did. As a matter of law, the Supreme Court agreed with Westport and dismissed the complaint. It goes, the appeal, CRO appeals, and the appellate division holds that CRO's allegations in the complaint, that even to the extent that they are alleging that it physically altered the property in the restaurants, is conclusory. There's no evidence even alleged that it did. And CRO failed to identify any physical change, any actual physical change, transformation, or difference in any of the property. And that gets appealed. So they affirm what the Supreme Court did. It goes to the Court of Appeals. And here, the Court of Appeals does what they're supposed to do under insurance law. They parse every single language of the disputed provision to see, is it ambiguous or unambiguous? They go through every single word and they find that it's unambiguous. The phrase direct physical loss or damage requires, is what they hold, material alteration or complete and persistent dispossession of the insured property, one that is perceptible even if it's invisible. It has to change something about the physical space. So loss of use, which is what CRO is kind of alleging, is different than different than direct physical loss. Direct physical loss is more than loss of use. Direct physical loss requires an actual complete dispossession. And they're not alleging that. So CRO is alleging this is dangerous to human beings, and the Court of Appeals is saying risk to humans is not covered. Coronavirus may be dangerous to people, and that's why it caused loss of revenue, but that's not covered by the insurance policy. Only damage to physical property is. And because there's no allegation in the complaint of a need to repair or replace the insured property, nothing was actually broken or damaged. Maybe you have to use Lysol to kill COVID on surfaces, but that's different than throwing out all the chairs and the tables. Because of that, there's no actual direct physical loss or damage, and the complaint was properly dismissed. And that's the case of CRO, Consolidated Restaurant Operations, versus Westport Insurance. Have a good day. If you like what you just saw and want to see more just like it, please hit like or subscribe to let me know.